Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Tuesday, February 8th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside in the first term time frame. This current candle has made a lower high and a lower low, and the market has tested down through some very important levels of support. There was potential for support to come in at 1867 down through to 1958, all the way down through this highlighted yellow zone, and the market has in fact found support just through that highlighted zone down below 1840. As we saw about a couple of weeks ago when the market tested down through there, testing to 1813 and closing back above that zone as we've seen today. We also tested down below 1850 as we saw for that day's trading. Now we have seen the sellers still make some net progress between the open and the close with the formation of a black body candle, so certainly the sellers still have shown some strength in this market. We haven't seen any strength from the buyers, but what we did see was the formation of this larger shadow on the bottom, and the sellers failed to take control and once again lose commitment down below these important levels of support. And this suggests that even though the trend is down, there is a possibility of a change of trend to the upside. Now it is only a possibility, and the important thing here also is that we're not seeing any strength from the buyers. Importantly, in terms of Ichimoku, we have the market trading in a negative manner in all three timeframes by trading down below the cloud, down below the Kijun-sen, and below the Tenkan-sen, and that suggests that the market is negative in the long-term, medium, and the fast-term timeframes, and that negativity is also supported by the Chiker span. A few things to watch here for in terms of Ichimoku, however. It's the depth of trading away from the Ichimoku cloud firstly, and that suggests that the market may be overextended, and in line with the sellers losing commitment, there is a possibility of a change of trend back to the upside. Also the depth of trading of the Chiker span below the corresponding price action. It is looking rather extreme, so a bounce here wouldn't surprise, but we're not seeing any strength from the buyers, so we do need to be just a little bit cautious and continue to watch these areas of support if the market does test down through these levels. The important level will be this 1813 level that we tested to about 2 weeks ago, and then just down below there that round number 1800. Just looking at something of a pattern that may have formed whilst the market was attempting to retrace that very strong sell-off that we saw down through the Ichimoku cloud, and something of a flag type pattern. And here we have the trend down leading into the pattern, the flag here, and the close down below the lower barrier, and some follow through today, and this suggests that the pattern has completed and there is a possibility of the market continuing to trade down. Now in terms of measuring the potential target, the target is the extent of the trend leading into the pattern projected from this area. So the target is well below these important areas of support, but I suggest that what we do need to do is wait for some of those areas of support to be taken out if we are being rather conservative. A less conservative trader may have taken the sell signal down on the close down below the lower barrier. Now just using the Fibonacci extension tool, and here we're examining the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend, and here we see the market testing below the 100% level and being rejected from below there, closing just around that level. So this suggests that there is a possibility of a change of trend with the sellers losing commitment down below that area. Now obviously we do require confirmation for that change of trend, so we will be looking for a higher high and a higher low to confirm. Just moving to the bands here with the S&P, and importantly we saw the market trading within the bands for the last couple of weeks and finding support over the last few days down around the bottom of the bands and resistance at the top of the bands, and the bands have been squeezing up, and that very strong downtrending activity had finished, and the market then was preparing for another move. Now we have had the market close down outside of the lower band, suggesting a stronger negative tone to this market once again, but the close down below hasn't been bearish or totally bearish. We've seen the sellers lose commitment. It is a bearish sign with the black body candle, but certainly we would have preferred to have seen the sellers closing with control and not losing that commitment. What we'll be watching for now is some follow through, and we'd like to see some bearish follow through, but importantly the swing low down around 1811 is going to be important. If we close down through there in a bearish manner, we could see the market continue to accelerate to the downside. We will be watching the lower band around 1873, 1874 to hold as resistance if the market does attempt to rally, but we could find anywhere through to the top of the bands up at 1924 to hold as resistance. But certainly with the close down below the lower band, it does suggest that we could see continued downside, but not convinced yet because of the loss of commitment by the sellers today. Now just looking to a market breadth indicator here, the advanced decline line, and this is the cumulative advanced decline line, and the 50-day moving average seems to be a good indication of the tone in the market, and we are still trading down below that 50-day moving average, suggesting that we still have a negative tone. And over the last few days we have seen the advanced decline line move down below that lower band, suggesting that there is some weakness in the S&P 500. Also, the Hall-Land indices or indexes in their various time frames are giving us a negative showing here down below their various averages, and that previous uptrend that we saw in them has now completed, and there is a possibility of them moving lower, suggesting we could see further downside, but still not convinced with the sellers losing control and losing commitment in this candle today. Interestingly, looking at the VIX indicator, and the VIX has started to trend higher as we've seen a downtrend form over the last couple of days, and this suggests that fear is returning back to the market. And even though we've seen the sellers lose commitment on this candle, it's suggesting that based on the options that the VIX indicator is connected to, that there may be some continued selling. Importantly, with the VIX oscillator here, it has moved above that 5% level, and it's suggesting that we could see some continued weakness over the next few days. But as always, we do require confirmation of the next move down with a lower high and a lower low. And to some of our sentiment indicators based on Ichimoku, and firstly on the top subchart, I'm examining the relationship the percentage of stocks in the S&P 500 that are below the Tenkan-sen or above the Tenkan-sen, and in this case above, and we've only got 30% of stocks that are above the Tenkan-sen, so suggesting short-term weakness. The next one down, the second subchart, is measuring the percentage of stocks that are above the Kijun-sen, so looking at the medium-term time frame, and once again with this only 30% of stocks are above the Kijun-sen, so suggesting medium-term weakness. And then the third subchart is the percentage of stocks above their Ichimoku cloud, and that's down to 22%, whilst the final subchart measures the percentage that are below the Ichimoku cloud, and that's almost 70%, and that is moving higher, and it's suggesting that the market is still bearish, and we could see continued selling activity in the S&P 500. Next, moving to using a performance indicator that measures trending price action and momentum of that trend, and classifying the percentage of stocks into their various quadrants. In the top, the improving quadrant, the next is the leading quadrant, third subchart is the weakening quadrant, and the final subchart is the lagging quadrant. And what we see is a greater percentage of stocks moving into the lagging and the weakening quadrant, and the percentage of stocks that are in the improving and the leading quadrant have been moving lower, so suggesting that we have potential for continued weakness with the percentage rotating through, and we see in a cyclical manner that stocks will rotate through these quadrants, and at various times in the strength of the uptrending or downtrending price action will have a greater percentage in and flowing through to these various quadrants. And at the moment, with the lagging quadrant on the improve and the improving and the leading quadrants moving lower, trending lower, it does suggest that there is potential for further downside in the S&P 500.